Hey, what's going on, guys? Welcome back to another video. Now, my name is Luke and I'm the founder of Zeus Capital. So for those of you that don't know me, that's what I pretty much do. So yeah, let's jump into it. So this video, we're going to go over the COT report. Some of you may not be familiar with it, but the whole idea behind this video is just obviously show you how to use it and what it is and how it's beneficial to us. So the Commodity Futures Trading Commission, or also known as the CFTC, they published the Commitment of Traders report. So it's called in standard short term. It's COT report, and it's released on every Friday around 2:30 p.m. Eastern Standard Time or 7:30 p.m. UK London time. So I use the website called Tradingster. There's different websites out there. The official CFTC, they have one, but I just find that the others that compared to Tradingster, Tradingster is very simplified, pretty much. So for those of you guys and stuff, it may be very easier for you to access this website, and that's just why I like using it. It's very easy. But yeah, because the COT measures the net long and short position taken by speculative traders and commercial traders, it's a great resource pretty much to measure how heavily these market players are positioned to the market. So for example, as you see in a minute, you pretty much in simple terms get to see what the institutions and the hedge funds are doing to the market and how many short or long positions they are adding, right? So it's just tradingster.com. You're on this page, you can click on that to take you to all of pretty much what they do. So as you can see, you've got currencies, grains, livestock, stock indexes, metals, treasuries and rates, softs, energies. So you have loads of different things you can go through. So whatever you trade, it's all here for you pretty much. So I mainly trade currencies. So what I'm going to do is I'm going to check out the pound. Just click on COT. Now what we need to focus on is these three. So we've got the dealer, asset manager, leverage funds, right? Or institutions. We focus on these three. We also ignore the spread. We don't focus on the spread at all, right? You can do if you want to. It's not very necessary. It's not very relevant. The long and short position is more relevant to us, and that's where we get our information from. Quickly before I proceed with the video, it's all historical data. It's not real time. So this is a week behind. The reason why is just simply because the banks, well, institutions and funds, they have to legally report their trades, right? So each week it's a week behind, so it's not in the moment, if that makes sense. But it's still very beneficial, right? For example, if we look at the US dollar and the institutions are, adding more long positions than there is short positions, that essentially means that the, dollar is bound to be bullish, sorry. So how is this useful to us? Well, we could potentially look for a US dollar bullish, right? So we could look for bulls pretty much to kick into the market. But yeah, this video is pretty much self-explanatory as we get through it. But yeah, let's jump into it. So the dealer intermediary, so what they do is they are always the opposite of what these guys are doing, because like I said, there needs to be a buyer for every seller. So as you notice, these guys will be doing the opposite of what the institutions and funds are doing. So yeah, what we focus on is these two here and these two here as well. Right, so if we look at the long positions for the British pound sterling, or the GBP, we can see that as of 21/01/26, they've added 600 positions to longs and added 734 positions to the short. Now, just because they've added more short positions than long positions doesn't mean that it's going to be bearish market. It just means that if you focus on this as well, all it means is that they're just adding more short positions that specific week. Because you might find next week when it's released, they'll add more long positions than short positions, right? But what we focus on is the overall positions of what they have open, right? So right now they have 50,552 short positions open, and then 57,428 long positions open. And then also if we look at the funds, so these the pension funds and whatnot, we can see here that they've added 2,747 long positions and also 6,320 short positions, 321, sorry. So yeah, it's pretty much self-explanatory, and as you can see, they have more long positions than they do short positions, but they seem to be adding more short positions. So if we look next week on Friday when it's released at 7:30 in the UK time, if they had more short positions, then that could indicate a bearish pound. And then like I said, these guys are just pretty much doing the opposite of what these guys are doing, right? And like I said, we don't focus on these, they're not really relevant, so just ignore them. You can look into them if you want to. And as you can see, they have a long versus short position chart tool here. So if you want to look at this, if it's more standing, then that's completely up to you. Next thing we focus on is this. They do have all this other stuff if you really want to check it out, but like I said, it's not really relevant. This is the thing. This is what I focus on here. So what you can do is, it's very easy. Just click on them, and that will remove them. So if you want to remove the funds, it's absolutely fine. Or if you want to remove the institutions, it's fine. You can remove whatever you want, or even a dealer, right? So as you can see here, you go on the 1 year here. Okay. So as you click on that, it'll just take us to the 1 year chart. Now what you can do is you can take a screenshot of it, or you can print it out and then just draw a line through the 0. You can't really get perfectly on a 0, so I'll try and get, yeah, there we go, that's the closest as I can get. But what we're looking at is, if it's above the 0, then that means it's bullish, and if it's below the 0, then that means it's bearish, right? So when I take you onto the dollar in a minute, you'll see that it's heavily bearish, right? Just a quick tip as well, what I like to do as well, the way I see this is that the green is obviously the funds, and the blue is, you know, the institutions. But the way I like to see it is, these you know, the institutions, they're more slower paced, whereas the funds, they're more faster paced. And that just means, you know, that the institutions slightly follow the funds in a way. But yeah, it's just they're much more faster paced of what they do, and the banks are much more slower paced of what they do, right? So that's what I do, is you can untick this and whatnot. You can also look at this as well. So this is just the GBP, so this is the pound chart. If I just, how do I zoom out now? If I just, I don't know what the hell I do there. Just refresh the page. Oh, there we go. So this is the pound chart. So this is, you know, a weekly chart, I believe. Yeah, this is the weekly chart. So each week it will tell you, you know, this is literally right in front of you. So the weekly chart on a pound, so the open, high, low and close, you can go and hover over that and it will show you the close price and whatnot. But yeah, as you can see, the pound is clearly bullish, and in order for it to be bearish, we'd wait for this, you know, this low to be taken out, or this low. But yeah, it's pretty much self-explanatory. Just focus on, you know, them two things. Just remove these, don't focus on them two things, sorry, and just focus on these three things. Like I said, the dealer guys are this black bar line here, sorry. They're the guys who are doing the exact opposite to what the, you know, funds and the banks are doing, right? More specifically, the banks. As you can see, it's almost identical, so, you know, complete opposite. But again, as long as, if they're above the 0, which is around here, as the banks are, that means it's bullish, and if they're below it, then that means it's bearish, right? The closer it is to the 100,000s, the 50,000s, you know, between these two, the more stronger the bullish is, or the trend is, and then vice versa for if it's below 0. So if it's below 0 and it's close to the 100,000s, that means it's, you know, very, very bearish, right? It's much more bearish pressure than there is bullish. So as you can see, quickly recap, long positions right now as of this week, there's more long buying power than there is short power, right? So when we come back to look next week, let's see what happens, right? You can click on that as well, and just, if you want to go back a week or whatnot, it's absolutely fine. You can just go and have a mess around with it. 2020, you go on, you know, September, click on the 1st. So as of 1st September 2020, as you can see here, they're pretty much equal, right? But they still had more long positions open than they did short positions, right? So again, it's very much self-explanatory, but that's pretty much how you use it. If you just go on COT reports, you can go ahead and look at the, you know, grains, livestock or whatever, and it just tells you what they're doing. So if you trade, you know, stock indexes or whatever, you can check it out for them as well. So let's go on the yen. So as you can see, the banks or the institutions, they have reduced 405 long positions, and also reduced short positions by 107, right? But the total is 105,977 long positions, and short positions is 7,560. Alright, so this indicates to us that the yen, sorry, is much more stronger. You know, it's more bullish than it is bearish, right? And then the funds also have the exact same thoughts on that as well, but they've added more short positions that specific week. Then again, these guys are doing the exact opposite, because like I said, every buyer there needs to be a seller, right? So they're catching opposite. They're normally catching opposite to the banks as well, by the way. It's not really the funds. But like I said, the funds are more, the way I see them is more faster paced, and then the institutions slightly follow in a way, but they're more slower paced. Then as you can see, this is the price chart for the yen. So as you can see, it's quite bullish, right? So this was January 26th, so that specific week when the COT report was released. This was the open and the close of that specific candle, right? But yeah, this is a very powerful tool to use. Like I said, if you want to take off the funds, that's absolutely fine. And just focus on the banks and the dealer. But zero, as you can see right now, the bullish trend on the yen is very, very strong. But we have reduced since January the 5th, so the start of the month, right? Like I said, these guys are doing the exact opposite. As for them as well, gone to zero. The funds are slightly bullish, but they're not as strong as the banks are on the yen. You can go ahead and look at the max. You can look at the 2 years, 10 days, 1 month, whatever. It's completely up to you. I'll just keep on the pretty much 2 years, or you can drag it yourself. It's completely up to you. Lastly, we'll just quickly go over another one as well, which is let's look at the dollar. COT legacy as well. You can use this. It's pretty much the exact same as what the other COT report shows you. It's just that these are slightly different, right? It tells you the changes as well, so that's quite cool. But I just focus on this. It's just a COT report. As you can see, for the dollar, they're much more bearish. Well, not much more, but they're more bearish than they are bullish. They've added 74 positions. Added 74 long positions. Sorry, and also added 21 short positions. Right, and as for the funds, they've reduced their long positions and added more short positions. Right, so when we look at the chart on the dollar index right now, if I just get it up actually. If I just get the dollar index up for you. Alright, as you can see, we just put that there. So they've added more short positions and short positions as well. But this week the funds as well, they've added more short positions and reduced the long. Sorry. Alright, but as you can see, there's not much of a difference. Alright, so this technically, they're still bearish on the dollar, but it's still quite equal, right? But again, like I said, what we do is we focus on the overall, structure of the market. We follow a plan and whatnot. It's just added confidence. But like I said, the dollar index right now, this is last week, right? So 2021, that was a 126. There's always a week behind, just remember that. But you can go on a weekly chart, it's up to you. And as you can see, it's still pretty much similar to what this is telling you, right? And it's the exact same as well for the BXY, so the pound. When you go on the pound, as we discussed a minute ago, it was bullish, and this one's also bullish. Alright, but it's pretty much it's what they produce onto the charts, and it's a very good indication, right? It's a very good extra confirmation to have, and it's something to do as well on the weekend. So like I said, it's released at 7:30. So whether you want to print out for the pairs, so when you do your technical analysis, so when you look at the pound yen, you look for long positions, you look for dollar yen long position, short position, whatever, right? As your dollar, all I'm saying is when you do technical analysis, just look at the fundamental aspects as well, and also look at the COT report, and is that respecting it, right? Because like I said, if they're bullish on the dollar, but 1 week you see that they drastically reduced how much long positions they have on the dollar, and as they start to add more short positions, that could indicate a bearish dollar, right? So it's very important to utilize it with your technical analysis, even though it's a week behind. Like I said, these guys are what moves the markets mainly. Obviously, commercial banks, fundamentals, etc. But you want to be doing what the overall, what these guys are doing pretty much. And like I said, the way we trade as Zeus Capital as well, we, smart money trading or institutional trading, is whatever you want to call it. We still we do what the banks do. We just pretty much identify these order blocks, imbalance in prices, and obviously how to utilize them is something totally different. It's alright identifying them, but it's how you utilize it, right? Which is obviously what's in the course and much, much more. But yeah, that's something to take note in as well. It's just, smart money traders, we're looking to leave, pick up on what these candlesticks are left behind from the banks. But when you combine it with other things like this COT report, it's just going to become very more powerful and almost trading like the banks are trading in a central way. But yeah, that's pretty much it anyway about this video. It's very, very self-explanatory. Like I said, I hope this has, video has made sense. If it has, just let me know in the comment section. Just let me know below. But as always, if you want to join Zeus Capital, you're always welcome. Just head over to our website, and then it's pretty much self-explanatory from there. If you have any questions, just pop me a message, and I'll be able to help you out.